So what I've decided to do is we're going to take a look at the Dow Jones weekly chart, and we are going to be progressing 3 months at a time so we can see what the MACD could have helped us position ourselves in terms of market direction. Going back to the chart here, you see is for late 2009 here, so we are looking at October. So we're just going to go straight to it and try and see whether what we've learned over the last couple of videos can help us gauge what could have happened in the market as we go back and do this back test. So coming into October of 2009, you see that this is how it looked like. It seemed like we were breaking here, and so this, and also breaking this node here, so we're making a lower low there on the MACD. But notice we have our other MACD trading above zero. So really here I would not be very concerned with the market. I would say the market here was still having a bullish tone to it as it was moving back to its 10-week moving average. So let's jump forward 3 months later, and you see 3 months later the market did actually break this trend here, which is what we were talking about previously. It broke that trend there, actually somewhere around there. But what we notice is that the MACD, the main MACD, still stayed above zero. And so the market from that, the previous chart was here, the market would bounce back and was trading higher 3 months later. And now we see that it's come with its MACD here below zero and trying to move back on what seems to me like uniform activity with a U-type formation there. So I would say coming into end of February 2010, the market looked like it wanted to move higher. So let's see what happened next. So 3 months down the road, we see that the previous chart was highlighting this area here, and yes, indeed the market did move higher. You can see, yes, indeed the market did move higher here from this period here. Nice move there. And now we see that our MACD had actually formed an inverted U-type formation here, back below zero and back above it. So that was a buy signal there, and we can see that at the time our MACD was above zero. So this move here could have been predicted by our MACD analysis. So now we come back to this present chart, and what I notice is that this was a break of this trend here, also was a trend move below zero. So things were starting to look funky there. So let's say at a price range of, so this break was taking place here, so it was some time period here that was looked like a bearish developing chart. And also take a look at the fact that this MACD now was breaking that trend. So this was an area to concern ourselves at the time, because you have this below zero move, break of a trend, and also this break of this short-term MACD low here. So I would say here the market was looking neutral to down. 3 months later, this is what happened. We see that the market, so we were trading, we broke down here, so the market did actually go down and then trade sideways. Okay, now notice what's going on since then. So we have market coming down, eventually cross over here, and now back above zero. And also we see that this MACD has moved below zero here. So what seems to me to be going on here is, notice this up down looks like an inverted V formation. So that's bearish right there. It's bearish. And also there's a threat of this market breaking below zero here. On the same note, you always have to be careful, because this market could also snap back and move the MACD above zero, and you could have also this snap back. So because it's very close to zero here, you don't know which way it's going to decide to go. I would say here I would wait for the market to tell me before I make any strong bets, because either we get a strong bearish signal or we get a strong bullish signal with a crossover back above zero here. So 3 months down the road, we see that the MACD actually gave us a buy signal here because the crossover took place above zero and at the zero line. So this market defended the zero line here, which was a buy signal, and notice that this short-term MACD went below and immediately recaptured that zero line. So there was a buy point there and also a movement above this short-term MACD high. So this move here in price somewhere around here was a buy based on the MACD by itself. So we take a look at the chart here. See that here everything looks bullish. There's no reason to think the market is going lower, and that was in December of 2010 time period. So let's move forward to 3 months down the road, and you see that yes, indeed, the market actually had a nice run. So we were talking about this period here in the previous chart. Everything was pointing higher and the market continued pushing higher. As of right now, you see that coming into March, late March, end of March 2011, there was a crossover here, a test of the zero line which held, which is strong, and the market still holding the MACD above zero. So even at this time, I would say everything looked to be in the favor of the market moving higher, just based on the MACD by itself. Fast forward 3 months later, and you see the market did actually move higher. As you can see, nice move here. But now you look at the market here, back below zero, MACD pointing like it wants to recapture that zero line, but the main MACD here still, trending okay. There was some type of a trend break here, but it wasn't serious or decisive. So I would say even in this time period, the market is pulling back, but not the worst pullback. What you're looking for here is for the market to bounce back above zero and have this nice U-type formation below the line and back above it. So let's see what happens 3 months down the road. And you can see 3 months down the road, the market seems to have now pulled back. Actually, what happened from the previous video is the market went up above zero and then back below it. So if you are observant, this here was a signal something was going on in the market that needed to watch. And also this happened to be just around these highs here. And also notice there was a major trend break there. I say major because this could have been a nice crossover to the upside here, but the market actually did not cross over. There was no crossover, and then a break of this trend line. So if you add those two factors here, uniformity back above the line and back below it, so you get this type of formation here, a break of this trend line here. So there was another sell signal and then a break of this trend line, and then like I mentioned, that break. Also now couple that with this move here below zero on the MACD. That was a market to be very careful. I would say at this particular point, stay bearish or at least stay neutral to down given this chart. Let's fast forward 3 months later. You see what happened, and as you can see, the previous chart was somewhere around here, and what the market did was it actually managed to move back above zero on this MACD time frame. There was a crossover here, which is not what we want. We want crossovers above zero, but now we see that it recaptured back above zero here, and also after going up, down, found support at zero here, right there. So this market was a buy somewhere around here during this support level there, and also as this MACD moved above zero. So the market was bullish now after this strong slide here. The MACDs were telling us that now here was buy and here was buy. So I would say the market was poised to go higher. Let's take a look at what happened 3 months down the road, and that is correct. Seems like the market after this was telling us this was a buy period here. The market did grind higher here. So the MACDs were accurate there. 3 months later, see what it looks like. As you can see, we have another pullback here, But now, given this chart, this is what we are contended with. Market has come down, back above, seems to be wanting to take back this zero line, which is good. This MACD seems like it wants to cross over, so we need confirmation. But if this was to cross over above zero and this to recapture zero, I would say the tendencies for this market is to move higher. Now, the only problem with this exercise that we are doing here, which is backtest, is we already know that the market was bullish, so maybe our analysis is biased, but I'm trying to be as objective as possible here as we try and use the MACD and stay true to the analysis. So crossover here, good. Back above zero here, good. So even given this chart here, to me, I would say everything was pointing to a market that wants to go higher over many weeks. 3 months later, so we come back to end of 2012, December, and you see that we had a pullback here, the market wanting to come back to zero, taking a pause, and maybe if it recaptures back above zero, that's a buy signal. If this market crosses over to the upside and finds support at zero here, that's a good market to go long. On the other hand, we have to be cautious because it's getting very close. If it breaks down here, it would also be a trend break of these lows here. So I would say at this particular point, you'd want the market, if you're bullish, to move above this level here, and also the market to recapture this zero line with a crossover. 3 months down the road, of course, we see that we got the crossover here, beginning of 2013, back above zero here, beginning of 2013. So the market had a nice run here. And even after this run, you see that the MACDs are still looking bullish, way above zero and pointing to the upside. So that's still a bullish market. Even if you get corrections, the market has not given you a sell signal. So let's move 3 months down the road, and you see that now we have a crossover here, which is above zero. Crossovers above zero are not as strong, okay, but something to watch. And also at this particular point, look like we were breaking this trend here, or very close. So one or two things can happen. The market can slide here and start looking bearish, or at least short term, and we're going to need this MACD to come all the way to zero. And you can see the possibility of that happening immediately is not going to happen. It's going to take many weeks for this market to move back below zero. And that particular time, I would say maybe this MACD would have crossed zero and back above zero. Okay, so right here I would be neutral to bullish, just because we haven't seen a major sell signal. 3 months down the road, it's what the charts look like. So we were here in the previous chart, which was somewhere around here. Actually, somewhere around here is where we were in the previous chart, which is this area here. So you can see the market really did not go down and not much higher, but it was generally positive. Okay, there was no sell-off, nothing, because there was no major sell signal. Okay, so now given this chart here, we start wondering whether this is a sign of a market that is about to drop. We're getting very close. Moving averages are pointing lower. We had this move below zero, back above zero, and now wanting to go down. So here I would be a little bit cautious, just given this chart here, unless, of course, I'm not going to turn bearish here because we haven't moved below zero, but I'm going to start be cautious here, because if we break here and slash zero here, it's a market you want to avoid. So let's see what happens 3 months down the road. And you see that we never did move below zero here, so that remained positive. The market remained positive, and you can see the MACD managed to bounce higher. So that explains why there's a slight movement to the upside there. So this being the current market, one can only say that this here looks like a market that wants to cross over here. It wants to cross over. So if it crosses over, that's a good market, and you can see the MACDs are still pointing higher. So using the exercise of the MACD, the current market right now, without knowing what's going to happen in the next couple of weeks, looks like the market is neutral to positive. Eric Mwade, good luck, peace, and blessings.